Malcolm Hollensteiner. For a while we were hearing disappointing news from the housing sector, but we got a good April construction report. What are you seeing in the housing market right now?
Well, any news right now that's positive is a step in the right direction. Obviously, it's been a very difficult winter, no surprise because of the weather. We're anticipating, what we're seeing is that activity has picked up in the last month or so with the weather improving. Still have some concerns about prices increasing faster than incomes. Nationally in 2013, average sales prices around the country went up by over 12%. Incomes only went up by 2%. So housing affordability is becoming slightly less attractive in certain markets on the East Coast especially, and that's a concern.
All right, so what can borrowers do to get those houses if prices are moving up and the debt to income ratios is making it tough for people? What can folks like TD Bank do?
So obviously the loan programs that are available today become more important as far as especially first-time buyers, helping buyers with low down payment loans that also allow them to aggressively qualify for the property. So TD came out with a program in the last few weeks called the Right Step Mortgage, which is a 97% loan to value for buyers without having to pay any private mortgage insurance. So it's a program that allows a consumer to get into a house for a low down payment but with a lower monthly payment than typical.
But if we make it too easy again, are we going to get back to the good or bad old days when it was too easy to buy a house and people would get into these adjustable rates again and the whole housing crisis will snowball again?
I don't think we're going to have to worry about that because if you look at programs like TD's Right Step program, it still is a fairly conservatively underwritten program as far as maximum debt to income ratio, minimum credit score requirements. So I don't think lenders are going to turn the clock back to 2007 regardless of how soft market conditions might be. You hear speculation about that, but we have not seen that in the industry yet. It still is tougher to qualify for a mortgage than it was 7 years ago.
How tough was the winter season for you folks? I mean, I would think that there's a lot of pent-up demand for people to go house shopping right now because people couldn't leave their houses this winter.
It's been a tough winter everywhere in the industry, and we're still in a very different dynamic of a market where the traditional first-time home buyer hasn't played a part in the recovery because even through April, in some markets, all cash deals were 40 to 50% of the sales, which means the majority of those all cash deals were investors. So until first-time home buyers start to replace investors as the engine behind the recovery, we're going to continue to kind of middle along here on this housing recovery.
All right, thanks a lot.
Okay, thank you very much.
And thank you for watching The Street.